What's up, everybody? Hey, and welcome to another episode of This Week in Real Estate, hosted by yours truly, a bearded man of real estate. My name's Ray, and we are live everywhere you can go live on YouTube, Facebook, Instagram, Twitch, Clubhouse. And I'd love for you to join us there for episode number 292. That's a lot. We're broadcasting this live Wednesday, October 9th, 2024. Everywhere good broadcasts can be seen. And the title today is Disastrous Housing Market. It's a little play on words. Of course, everyone knows about the disasters that are going on. We're going to talk a little bit about that. We're also going to talk about just the overall impact on housing for that, because it is a concern from everyone who lives there and everything they're going through to everyone else in the country. We also have some news and updates about the NAR and the lawsuits. There's also a question. If you're a real estate agent, I need you to stay tuned because I need you to chime in and tell me what you think. What home buyers expect from real estate agents in 2024. With everything that's changed, what's the expectation? We're going to talk about that, and we're going to go over everything that's happening in the market. So thank you so much for tuning in. And because of your support, we are now members of the YouTube Partner Program. So you guys can go over there on YouTube. If you comment, I can display your comment, just like Mike V. He said, "Where's Matt?" That is a question everyone wants to know, because Mike V was first today. To be honest, Mike, it could be because we're starting on time today. Because I'm hearing the sirens in the distance, which is our 12 o'clock Wednesday siren. Do y'all have a 12 o'clock Wednesday siren, or is it at different times around the country? Because every Wednesday, 12 o'clock, we get the warning. And so I usually wait on that to end before I go live.
We don't get one.
You don't get one? How do they test? How do they test all your sirens? How do you know everything works in your emergency broadcast system?
Like once a month.
Interesting. Okay. We do it every single week. Well, I mean, I'm not in Tornado Alley, so that would be the wrong phrase, but I'm near enough it to where a lot of people in Arkansas say, we're in Tornado Alley. We're not, but we're near enough that they test it every single week, I guess. Maybe that's why. And you just heard Terry chime in on Clubhouse. If you are on Clubhouse, you can raise your hand. And if you have a profile, the moderators will bring you up to the stage, and you can actually add your voice to the podcast on Clubhouse. So I think I know we're the longest running real estate news podcast in the world. I know we were the first to multicast. I think we were the first ever podcast, period, to multicast on YouTube, Facebook, all the other various sites, and Clubhouse, and allow listeners to basically call in via Clubhouse and add your voice to the show. So you guys can do that too, or you could just comment. I could display your comment just like Mike. Mike V said, we have phones and technology. But sometimes that doesn't work in bad storms, Mike. Different way of life, I guess. Well, I guess an earthquake has less of a chance of taking out your phone. But, when the towers go down, you got nothing. There's no way of getting out. Lindsay Loveless, what's up? She said, what? I don't even think we have sirens. I mean, I guess when there's an earthquake, everybody knows. Like the ground is shaking. There's your warning. Lindsay's over in Cali too. All right, well, thanks everybody for joining. Let's dive right into the news. First up, we have a little bit of industry tea. I don't even have time to have the sounder today because we got a lot of stuff to cover. So let's just jump right into it. NextHome CEO James Dwiggins takes on clear cooperation critics. So this stems from an article that we covered last week in which we talked about clear cooperation, what companies were for it, what companies were against it, what it was and why. And now NextHome CEO takes it on. And he's basically saying that he thinks it's in the subtext here. In a LinkedIn post Tuesday, Dwiggins claimed that brokerage leaders fighting to repeal the pocket listing rule are concealing an agenda to hoard listings, recruit agents, and generate internal leads. Without a question, that is part of it. But also, that is not all of it. So there could be an agenda from some brokerages to try to hoard the listings and sell everything internally and say, we are the best company because we have the best listings and you shouldn't go anywhere but with us. That could be. But more importantly, what does the client want? That's what I'm about. Give the client the options. I feel like it's best for me to be able to tell people I have a coming soon listing and to be able to tell them as long as I want or as long as the seller wants. So currently, with the way the clear cooperation policy is written, you can't do that because you can't have a quote pocket listing. And if you do have a pocket listing, you can't advertise a pocket listing. So I think Dwiggins' critique falls on deaf ears because his critique does nothing to address that what he is talking about can happen with the way the clear cooperation policy is currently written. He said, they're distracting you from the real motives to keep listing off a broader market of internal promotion, recruit more agents, and get access to inventory to generate internal buyer leads, double end deals, and boost profits. Dwiggins wrote in a counter argument aimed at Compass CEO Robert Refkin. He goes on to say, well, this is Kelman. Glenn Kelman said, without strong data cooperation policies, agents will rush to join the biggest broker in town, even at lower splits, just to ensure their customers can see all of the homes for sale. The goal is in weakening the clear cooperation is to make being bigger matter more than being better. That is the law of the jungle, masquerading as freedom. That's a great quote. I don't agree, but that's a great quote. So the problem with this statement is that if you repeal clear cooperation, then you're going to allow brokerages to take all the listings and market those listings within their brokerage and try to get more agents. The problem with this argument is that that can happen now already. Someone can list a property and sell it within their brokerage right now without ever making it public, and they can promote it and publicize it right now. So I don't understand why he's saying they take on clear cooperation critics. The thing that he's promoting, clear cooperation, allows the practice that he's stating would happen if clear cooperation was gone. Is there something I'm missing? I don't think I'm missing it. But hoarding listings internally can happen right now. What was that? Go ahead, Clubhouse.
So it was me. So when I lived in California and San Diego, it was difficult to get people to sign buyer agency contracts because they were working with 6 agents for exactly that reason. They were working with agents who said, well, we have pocket listings. And so they would just join, an agent in all of those companies and never sign a buyer agency contract, zero loyalty. They were just going to go with the first person who found them a house. But
that can currently happen.
Yeah, absolutely.
Clear cooperation doesn't prevent this from happening at all.
Yep.
So I don't understand why that's I think there's plenty of reasons to be against or for clear cooperation, but I mean, he said this, if major portals like Zillow can't get access to most listings on the MLS any longer, don't put it past them to pivot and figure out how to win long-term. This could be the very thing that pushes them in a different direction, and the one the industry has been talking about for almost 2 decades, where they go head-to-head with traditional real estate companies. So what he thinks is if clear cooperation, he said the CEO also brought up the implications for listing portals and MLSs if CCP goes away. So he thinks if CCP goes away, then Zillow will say, gotta watch that. We'll say, F it, I'm just going to be a broker, and we'll compete head to head with real estate companies because now they can't get access to all the listings because other brokerages are holding them. My point is that can happen right now. A brokerage like Compass can take all of their listings and promote them in within their company right now. They could do that. That's not against clear cooperation. Clear cooperation comes into play when Compass wants to take all of these pocket listings and then market them publicly, which means now they're no longer these private listings. Now everyone knows that Compass has that property because they've marketed it. And if that happens, well, now everyone in the marketplace knows it. So if everyone's got access to it, then I can bring an offer on that property too. What am I missing in this? There's got to be something I'm missing. What's up, Janice? Feel free to come up.
Hey, Ray. Actually, Howard Hanna has done that in our area. I think they've done it in Pennsylvania. I don't know if there's anybody in here that is with Howard Hanna, but they have, so like their listings, they're in the MLS, but they cannot be marketed by us unless the client has a signed agreement with us and signed up on our portal.
on your porthole. I got it.
Yeah. That is the only way they can see it when they're on our portal is if they've signed up. Then they can see that brokerage's listing. But if not, if it's just somebody random searching on my site, they are not going to see that brokerage's listings. They have blocked it. And I apologize, I forget. It was like a year ago they started doing that, and they I forget what it's called, what they checked or signed to do in the MLS to be able to do that.
Interesting. Howard Hanna is going to be in another news story that we have about them today too. But yeah, I'm not fully, I would not put it past Mr. James Dwiggins to be far smarter than me and to know exactly this loophole that he's talking about. But in my reading of Clear Cooperation, his gripe does not add up. You can do everything that he's talking about these companies would do, you could do right now. So maybe there's a different way to go about it. Or like you said, Janice, maybe there's additional thing, an additional tool that they can use somehow. I don't quite understand the direction he's headed for the complaint. And that was my biggest, my complaint with Clear Cooperation is that it didn't go far enough. For them to stop the practice that they say they were trying to, of real estate agents trying to double in deals and brokerages keeping listings into themselves. That's what they said they were trying to do. And yet Clear Cooperation allows brokerages to keep these properties within themselves and agents to, keep a listing from hitting the market and double in the deal. So the exact thing they say that Clear Cooperation is supposed to prevent, it allows. So I don't understand. I don't get it. Drop in the comments if you disagree with me and you can tell me and articulate exactly the problem with this. I want to know because I feel like I'm missing something. And I hate that feeling, but every time I've read through it, it's the same. So, all right, well, let's talk about EXP. First, I want to note the EXP's logo, text version of their logo is little e, capital X, little p. And it drives me crazy when journalist outlets do sentence case and it looks like expa because the E is big, the X is big, and the P is little. I mean, surely I know they're trying to go by certain rules of articles and such. Like they'll always use the last name of someone, which my last name's Ellen. So I don't love it when somebody quotes me and says Ellen says, because I'm like, oh crap. But the other thing I don't like is when the word EXP is at the front of a sentence and instead of putting their text version of the logo, they're trying to write the company name and they just capitalize the E because it just doesn't look right. Anyway, I wonder if they thought of that when old Glenn was coming up with the logo on Logo Arena. If you don't know, that's where the logo came from. All right, EXP agrees to pay $34 million to settle the Antitrust Commission lawsuit. One of the last holdouts, I don't know if it's the last holdout, but one of the last holdouts in all the settlements was EXP paying $34 million into the settlement that funded has surpassed now $1 billion for the total class. It will also make unspecified changes to its business practices. The settlement resolves all claims against similar claims, blah, blah, blah. It's the same kind of news release that everyone has had so far. EXP will pay $17 million to the fund within a month of receiving the final court approval and another $17 million after that. So EXP is one of the last holdouts has settled. They're the third largest earning brokerage in 2022, pulling in $159 billion. So Compass agreed to settle in March for 57.5. Home Services of America settled in April for 250. That's wild. Douglas Edelman settled for 17.75. Redfin agreed to settle for 9.25. Real Brokerage settled for 9. And EXP settles for 34. So there you go. They're out of the woodwork. But is there more? Commission suit against Howard Hanna, MLS tossed on the merits. Is this the first one that's been thrown out? This is interesting. About 3 months after the West Penn multi-list agreed to pay nearly $1 million to be covered under the National Association of Realtors antitrust settlement, the broker-owned multiple listing service and fellow defendant Howard Hanna have been dismissed from a commission suit outright. The resolution is unusual in that some 24 commission suits have been filed across the country. Nearly all appear to be heading towards resolution via settlements rather than being dismissed on the merits or court process. Judge William S. Stickman of the U.S. District Court of Western District of Pennsylvania granted June 4th motion to dismiss, filed by West Penn MLS and Howard Hanna and Everest Consulting Group, which does business in Berkshire Hathaway, and it's been dismissed with prejudice, which means permanently. Other defendants have settled in the case, therefore the judge has closed the case. Interesting. The plaintiff still can appeal. The reason why, the basic reason why the lawsuit, the plaintiffs allege by implementing and maintaining and enforcing buyer broker rule, West Penn and the brokerage defendants are required to pay and inflated the cost. The plaintiffs allege buyer broker rule mandates a blanket offer. As written for the MLS pins, the rules do not require a buyer to pay a commission at all. And in fact, the rule expressly permits the listing broker to offer a buyer broker no compensation. What? So if you're MLS allowed zero compensation, that's enough to throw out the whole case? Man, if Gary Keller knew that, maybe he wouldn't have argued so much that real estate agents are independent contractors, and that's all he said. I mean, that could have saved, what, $1 billion in the industry? Did anyone's MLS allow no compensation on the buyer side that was involved in the settlement and had to settle?
MLS PIN still allows compensation to be displayed, and it can offer or not offer, even to zero, subagents, buyer agents, or facilitators.
I wonder how many other MLSs are going to start following their lead. It had been that way in our MLS. They just took it out, where now you can't show anything, but we could have offered zero. There was no regulation. There was there's always been an informal agreement or a suggested split in our area where listing agents keep 60% and they give 40% to buyer agents of whatever the compensation negotiated is. But it's very, I haven't ever seen it written anywhere, but that's what people suggested. And that got busted up pretty quick because people started splitting evenly or even more, 80-20 I've seen. And you could always put zero in there or a variable compensation. That could always be. So I don't know. I guess the legal team in Arkansas thought that they should still follow the rule and take it out. It is owned by our board. So it's a realtor owned. Let's see if there's anything else in this suit. I think that's about it. But that's pretty big. Because West Penn's MLS rule expressly allows $0, it's not the same as NAR rule that's been challenged in the majority of antitrust commission lawsuits. All right. This is the last one. Last one of the lawsuit day. Realtor.com claims a former editor violated the federal act in a new filing. So you might remember Realtor.com went after this editor who then started working for Homes.com, I believe it was. Is it Homes.com? Okay. 2 weeks after, and that was denied. CoStar is where they moved to. So Move has filed a new motion claiming former Realtor.com news and insights editor James Kaminsky violated a 1986 Computer Fraud Abuse Act when he accessed Move-owned documents roughly 40 times after being laid off in January. The CFAA prohibits internally accessing a computer without authorization or in excess of authorization, and includes maximum prison sentences of 10 to 20 years for obtaining national security documents, accessing a computer and obtaining information, extorting involving computers, and 6 other hacking offenses. The attempt and conspiracy to commit CFAA offense carries a maximum sentence of 10 years, according to the National Association of Criminal Defense. That's interesting. Move's counsel claimed that Kaminsky's actions, which included deleting personal information and documents from his Move-owned computer and accessing several news and insights editorial documents and presentations, qualify as CFAA offenses. Move claims Kaminsky shared the documents with CoStar to bolster the portal's Homes.com traffic and caused more than $5,000 in damages, matching the CFAA threshold. I don't know. What do you think? What information could he have accessed as an editor? He changed his personal information. I think that's probably not a big deal. But he accessed other information that gave them an advantage. And Mr. Kaminsky's attack on Move's protected computer systems, both as an individual and a CoStar employee, caused significant harm and certainly more than $5,000 in damages. So he went from I can't remember the exact charge he first had. Maybe it says it here at the top. No, but now he's a hacker under the 1986 Act. That's getting wild, man. Echoing his previous comments, CoStar General Counsel Gene Boxer said Move's CFAA claim is another PR stunt in response to the company's motion to dismiss the case. We're grateful the court has already denied Move's request for an injunction. The court's opinion underscores what CoStar has said all along. Move's case is built on a baseless speculation and not fact. So when they have to, I don't know what they would have to prove because I'm not an attorney, but wouldn't they have to prove that not only was the data taken, but it was used? And how would they prove that? And what data is it? Apparently, it was on his corporate computer. So what it sounds like is he was let go or quit. Was he let go? Was he fired? It says up here that he accessed the computer 40 times after, where is it? I can't remember what I said earlier. That's bad. That's bad. But he accessed the computer like 40 times after he was let go or terminated or quit. And one of the things he changed was personal information on the company computer. So that makes me think that he went in and he took his data. He took his own personal data that he found in the computer out before turning it in. But then he did access 40 times the move.com data, whatever they were storing there. Now, I wonder if it was actually him accessing it or if it was the computer being on and the computer pinging back and forth, saving stuff to their cloud, because your computer will access stuff in the background all the time. Is that also you accessing that? Or can they show that he went in, put in his login, and accessed their editorial files, documents, all that stuff? Very interesting. We'll keep an eye on that one, see what happens. But that's the end of the law files. I got to come up with a name. There's so much. I mean, we've been through like 2 years of lawsuits, and I haven't come up with the name of it yet. But oh well. Here we are. All right, let's talk about this. I want your feedback. Oh, you know what? I'm missing a couple of comments. There goes. Hillary said, LOL, they Compass already does heavily market in-house. Yeah, that's what I was saying. See? Sorry, I missed your comment earlier, Hillary. All right, what do home buyers expect from real estate agents in 2024? Now that real estate agents have to actually tell their client, hey, you have to pay for me. And there's a lot of real estate agents that are not great at communicating this. And the client's saying, nah, I'm out. Well, what do home buyers actually expect? I think if home buyers expect you to open the door for them and them to send the Zillow link to you and they're finding their own home and you're opening the door, you ain't going to get paid these days. So what do home buyers expect in 2024 and beyond, 2025? This article is from Broke Agent Media. It says half of all home buyers in 2024 say their agent is the most valuable resource in their home search. What? Only half? This is bad news, real estate agents. That number used to be a lot higher. Now the clients don't even look at you like a valuable resource. Half of the clients say that you're not as valuable as something else. What is this something else? I don't know, Zillow. With recent industry changes, endless amounts of information consumers' fingertips, the role of the buyer's agent is evolving. If you're not adapting, you're already behind. So your expertise is your biggest asset. When it comes to navigating the complexities of buying a home, a real estate agent remains a buyer's most trusted guide. Well, only 50%. Oh, see, Tom Toole says the same thing I said. Real estate agent, 50% of buyers found their agent to be the most helpful resource. A real estate app or website? What could that be? A real estate app or website? 36% of buyers think that's the most valuable source. Advice from family and friends, 15% said that's the most valuable source. Yeah, Tom Toole says, what is amiss here by real estate agents? Only 50% said their agent was the most helpful resource. That means you're not setting the right expectations as an agent. That means there's a lot of bad agents out there. No surprise. Yeah. Number 2, digital tools matter. While your professional expertise is a valued asset, it doesn't mean that there's no place for technology. According to the Zillow report, 94% of buyers use at least one online resource during their home search. 80% searched on mobile devices or apps. So that's super important. Of those who participated in the survey, 70% noted that 3D tours and digital floor plans help them understand the home's layout better than basic photos. While the vast majority, 73%, prefer impersonal tours to virtual. Buyers appreciate the convenience of the other tours. 64% prefer to schedule tours online. 67% said it would be easiest for them to unlock the properties from their phone and tour on their own time. Wow, that's a really high percentage. They just want you to somehow give them the code and let them have access. 67% of people want to go on their own. That doesn't surprise me though, because if I was looking for a home, I'd want to go on my own too, and I can because I'm an agent. So I get that.
Yeah, but if you were getting sued for $1 million, wouldn't you hire a lawyer?
I would, but
I think there's some ignorance in this whole thing that, buyers don't want to sign agreements now and they're just going to go it alone. The biggest problem with that I've been seeing, if somebody says they want to go it alone and they don't want any representation and they want to put an offer in on a house, we shouldn't be filling out the offers for them.
Yeah.
We shouldn't be helping them along the way. And if when I sit down with my sellers, I tell my sellers that you owe me a certain percentage. You're going to pay up to a certain percentage for buyer agents. And if somebody comes in unrepresented, I would give them a counteroffer that says that they need representation in order to submit an offer, so that we know that everything's being done right.
But then I think you're going to get, I think it just opens you up to lawsuits if you try to force it. You could say the only way they'll be able to submit an offer is if they get an attorney. And that could be your working, what we do on, because we just had this happen the other day. Somebody wanted to write an offer. They said they don't want a buyer agent. The guy has no idea what he's doing. He thinks he's a wholesaler. We asked him if he was a wholesaler. He said no. We checked with the title company that he said he was going to use, and they're like, yeah, he's totally a wholesaler. So we have a couple of ways to go about it. We could say, all right, well, send us your offer, and just he's got to go get an attorney. He's got to submit the offer. We can convert that to state forms if we want to. Or I could say, okay, well, what do you want to input into your offer? And he makes the offer. And then I get with my client and say, is this acceptable to you? If it is acceptable to you, then we could take the offer and do basically a reverse offer. So what we did is we put our terms and everything we wanted into the agreement that he hadn't specified. We put the things that my client would agree that he did specify, and we sent him the paperwork with our client having already signed it. So this makes it a reverse offer. So now if he signs it, it's written on behalf of my client with my client's terms in mind, and he, the buyer, signs it knowing full well everything that's there because it says get an attorney if you need one. So that's kind of the way we've done it, where we're not necessarily doing the paperwork for them. We're doing paperwork on behalf of our client, and we're putting the terms that he said he wants in there, but it's up to him to get the attorney to make sure that those terms are there. That way we can represent our client, because I also don't want it to be a detriment for our client. If they want to sell the property and we have somebody that wants to buy the property, I don't want to just say, well, all right, go get your attorney and send me an offer. And then the guy never does, and the property sits on the market when I could have had it sold. So we had to figure out, I do know of an agent that does it that way, and that's fine. That's a legal way to do that. But the question is, who does it serve? Am I serving my client better or not? And sad to say, I think I have to put up with the unrepresented buyer. But I think the way we're doing it works because it allows us to set the terms. It allows us to set some conditions that maybe that buyer didn't think about, and that's their fault because they're not represented. Eddie Smallhorn's here. What's up, Eddie?
Interesting.
Yeah. Yeah, I don't know if y'all can do that in your state, but you could try it, see how it works.
Yeah, I'm super stuck on how to best advise my sellers with unrepresented buyers.
Yeah. Yeah, it's interesting times. We're going to see it more and more.
Clear cooperation, and this is going to be, is opening us up to the cannibalism that happens when buyers feel that they need to work with somebody in every agency in order to not miss anything. It's the new dawn of, and again, so I think the end game is that it hurts consumer protection. And it's something that I've been saying all along is that, that could be the biggest unintended consequence of the lawsuits, of clear cooperation, of everything, is diminishing the consumer protection.
Well, I think you're right. It could go a couple of different ways. I think the advantage is to the real estate agent who works, who hustles. And I think as a real estate agent, you can create relationships with other brokerages in your town and find out about those properties by creating those relationships. And I think the agents that do that will be able to win more clients. So I can have an agreement. It's the backroom deals, right? You could have an agreement with someone that says, hey man, if you'll tell me what properties y'all have available, I'll tell you what properties we have available, and you're still keeping it in-house. It's still not publicly marketed. It's just me talking to another agent. And I think that's what you're going to see is agents trying to set up their own little networks of what's available and what's off market. I think you're going to see that more and more. I don't know if it's legal or not, but I think that's what's bound to happen to prevent buyers from saying, well, I have agreement with this person, across the board agreements with different agencies because of this. But I think if agents don't do that kind of thing, I think you're right, Jack. I think that's exactly what you're going to see. Back to the survey, the communication is key. Let me share there. Communication is king. Buyers in 2024 don't just want fast responses. They expect them. 54% of mortgage buyers reporting weekly communication with their lender, 41% ranking a lender's promptness as one of their top priorities. Buyers have similar expectations of their agents. You've heard this time and time again. As a professional agent, don't wait for buyers to reach out with the property they want to see. Regularly send properties that they may be interested in. That's what I always tell my team. Don't wait. Send them properties. On or off market, exact match or not, send them properties. Financial transparency. One of the biggest surprises for home buyers, unexpected costs. According to the report, 91% of buyers encountered at least one cost they didn't anticipate, with loan origination fees 66% and appraisal costs 54% topping the list. So loan origination fees are basically to pay down the rate. Interesting. They didn't expect a loan origination. Did they not talk to the lender or an appraisal fee? That interesting. First-time buyers were particularly vulnerable. 49% said their closing costs exceeded expectations. With industry changes going into effect this year, buyers also need to make now. This 49% said their closing costs exceeded their expectations. I wonder if that was because situations in which the rate didn't get locked in and the rates continue to go up. Y'all remember those times when the rates weren't locked in and it would continue to go up and now somebody's closing cost is more than they thought? I wonder if it was during that time or if this is a standard response. Your referrals matter. Despite the rise of online resources, referrals from agents remain a powerful tool in the home buying process. 19% of buyers found their lender through a referral. Offer negotiation strategy and support. 2/3 of buyers included contingencies such as inspections. 56% said financing was a contingency in their final offer. More than half, 52%, made their offer contingent upon the property appraising at a minimum value. So it looks like those contingencies are coming back fast. So interesting report. It's on Broke Agent Media. It's not behind a paywall. Whoop, whoop. What do you think is missed by this? Eddie Smallhorn says communication is important for any deal. I 100% agree. Communication is key. We're calling our clients weekly at least. 100% most important. What's missing that's not on the list? Anyone want to chime in from Clubhouse? Real estate, agent, website, digital tools, communication, transparency on the finances, and offer and negotiation with contingencies. I can't think of anything off the top of my head. I would say, maybe the having access to off-market properties. I don't think that was listed. So having access to the full inventory, which is kind of what we talked about with clear cooperation. Yeah, they said don't wait for your client to send you a property. I would agree, but being able to send them off-market properties as well, and that could be a myriad of ways. You could call other agents and get those off-market properties. You could have the off-market properties, or you could be door knocking, sending mailers. So maybe a sixth would be marketing your buyer like a listing, or seventh, marketing your buyer like a listing, where you're getting it out there through various marketing channels that you have a buyer and what they're looking for. That way you can find properties that are not yet listed because inventory is so short. This is also not listed on there, but maybe an eighth would be having resources for building or builders. If they can't find what they're looking for on the market, being able to have them team up or partner with builders would be smart. What other services? Drop it in the comments. Let me know if you're watching this on replay. Let me know your thoughts. What is missing from buyer agent services that clients now expect in 2024? I think the expectation has increased for sure, given everything that's happened in the market. All right, let's talk about the market. Nearly 1/3 of young adults say Hurricane Helene has made them reconsider where they want to live in the future. So this is interesting. We know, of course, about all the damage and destruction that happened there. Milton today is starting to hit the Florida coast. So, I mean, I can only imagine what that's like. We have a lot of tornadoes here, but it's a much smaller footprint. You know, when a tornado goes through the area, there's really not much warning. We don't see it months in advance, kind of like you do for a hurricane. But generally, you know, it's a mile or two would be a big tornado. The winds are a little faster, but it's still not the scope of damage that you find in a hurricane due to the size. So we're definitely praying for the people affected. We know some people that are in the path, so hopefully everyone will make it out okay. But even with all that being said, and of course, you know, I want you guys to reach out and help wherever you can. One of the things that damages these economies are when people turn away from moving there due to the natural disasters. And that is one of the worst long-term effects, is if they have an outflow of population that then also takes the money, takes the tax base, takes the tourism money in some cases with them. And nearly 1/3, 32% of U.S. residents aged 18 to 34 said they're reconsidering where they want to move in the future after seeing and hearing about the damage caused by the hurricane. That compares with 15% of respondents aged 35 or older. It's interesting that someone older is not as concerned with it, I guess. It's half of the older generation. You know, 35, it's crazy to say it's an older generation, but half of the older respondents don't, as compared to the 18 to 34 group, said that they're concerned. That's interesting. 15% of respondents 35 and older, 32% of respondents 18 to 34. The survey findings is a report from Redfin Commission survey. Scores of American flocked to the Sun Belt during the pandy because of remote work allowed them to take advantage of the region's relatively low cost of living. Some thought Appalachia was insulated from hurricane risk, not realizing that the area is prone to flooding and that hurricanes can cause flash floods away from the ocean. Americans are beginning to realize that nowhere is truly immune to the impacts of climate change or just climate. And we're starting to see that the impact of people want to live. What's up, Courtney? Courtney in Columbia, South Carolina said, I had a client that wanted to move to Greenville, South Carolina because it was far away from hurricanes. Then that week they were coming out to the Columbia area. Helene hit. Wow. She said, I blame him for Helene.
My sister wanted to move to Asheville as soon as her kids graduated from high school, and she's changing her mind about that.
Yeah.
But I'm wondering with a lot of this though, I know how I think the insurance rates are going to price some people out of being able to move to those areas, at least for a while.
Yeah, that's exactly what the article goes into next, actually. It's a perfect segue. It says nearly 1/4 of respondents think insurance costs will rise in their area after Hurricane Helene. Almost 1/4, 23% of respondents overall expect insurance premiums in their area to increase after Hurricane Helene.
I think they're going to increase everywhere and become a significant challenge in coming years for every deal.
Yeah, nearly 1 in 7, 13% of respondents overall said they think it'll be harder to get insurance for homes. You know what I think is going to happen, Jack, and you're going to think I'm crazy. I think it's going to start being optional. I think you're going to see additional coverage provided that'll be optional for people, like flooding in areas like, Asheville, that maybe is prone to flooding when hurricanes happen, but it's so rare. When in the world would that ever happen? And then bam, it happens one time in 500 years. And so much of the insurance has been required. I think you're going to see it be now the responsibility of the homeowner more so, the individual responsibility instead of group. If it continues to be
what
group,
happens to the lender, Ray?
Well, if it continues to be group, Jack, I think that you're going to have huge increases in the cost of home ownership, which could negatively impact the price of homes. It's definitely going to negatively impact the housing market. It's going to hurt people who are trying to purchase. But I think and you asked a great question about the lender, what's going to happen to the loan. I mean, they're going to have to make up the cost somewhere. So I would assume that if the person is not getting a certain or specific type of insurance, that they're going to have a rider of some sort that covers it for them. That's my guess, because I just don't see it working out where the cost for everyone is going to go up so dramatically. But it either has to be very specific to those areas that are impacted, and maybe the maps get a little bit wider after what we saw, or it's going to have to go on everyone. I think there's going to be some of it that becomes optional. Like right now, I have optional flood insurance right now. And
Yep.
you know, it's not that expensive in my area because the area doesn't ever flood. So I don't have
Are you
it.
in a floodplain?
No. But
Okay.
I don't know if I would be after. So what they do is they start to redraw this stuff, right? So I'm not in a floodplain now, but if the area floods, then I could be a floodplain in the future and then forced to get it. I think I just don't, the freedom in me hates that. I hate that. I hate that move because who are they to redraw it?
The reason I don't see it going away is that if I'm a lender and I own any percentage, even, more likely 50 to 80% of a home, I'm going to want to make sure it's insured. I mean, why would why would I not? Because if something comes through and scrapes the lot of the house, then I've lost a lot of my value.
I think the cost of that insurance would have to reside on the lender who wants it.
Yep.
I don't think it's going to be with the homeowner anymore. I just don't think that they can take it. I don't know. We'll see. I mean,
interesting.
If I have seller financing on a property, am I going to make sure that the person has it insured? Yeah. If they don't have it insured, am I going to? Yeah. So in a bank, insuring, how many homes have a mortgage? 70%. Spreading that around the country is a lot easier than putting that on homeowners. But I don't know. We'll see. It's just a outlandish prediction. Could be totally wrong.
So when we were in San Diego, the insurance companies were leaving in droves.
Yeah.
The big ones. They left. And if you had a mortgage, you had something like 60 days to get a new insurance policy.
Yeah.
So the state stepped in with what we determined to be the state unfair plan, not the fair plan. And you immediately had to find an insurance broker who then brokered out everything that you own. So we had 2 $500 policies on each of the dogs. We had a different policy for the farm equipment, a different policy for the guest house, a different policy for each vehicle, a different policy for every single solitary thing on our property. And our insurance went from $3,200 a year to over $13,000.
Wow.
Hence, we are no longer in San Diego.
Yeah, that's it. So that's what's going to happen. People are going to move. They're going to make different living decisions, just like this article says. They're no longer moving there. They're no longer living there, moving there. I don't know. It's interesting. I'm curious to see what happens. I would love to see lenders take on that burden because they're the ones requiring it. And, if you own your home outright and you don't have insurance, that's your fault. And I don't think you should be bailed out. Personally, if you don't self-insure, buy insurance. If you're going to self-insure, then you don't have to buy insurance. But I was wrong about the health thing, so I'm probably going to be wrong about this too. Courtney, living in Columbia, South Carolina, says that's what happened with flood insurance in Columbia from 2015 flood. That was the county's fault for releasing the dam too early, which was an anomaly. It took FEMA 8 years to finally reassess. Interesting. Elizabeth Nightingale says if you own your home, Elizabeth Nightingale says if you own your home without a mortgage, you don't have to pay insurance. Yes. She said, just ask
correct.
Susie Orman. That is correct. That's what I'm saying though. I think if the lender's the one that's requiring it, maybe the lender should be the one that buys it, and then your loan cost will just go up because the lender is a pool themselves.
Then you're going to itemize from there. So the lender is going to take the responsibility for the property itself, but not your things. So then
Right.
you almost get like a renter's policy on
Correct.
everything that you own.
This is why, so a lot of people go after, what's the guy's name? Cardone. A lot of people go after Grant Cardone because he says that in so many years, we're going to be a country of renters. And he's correct, because what he defines as a country of renters are people that are mortgaging out the properties and paying the lender for the property. It's as if they own the home until you finish paying off the loan, and then you own the home. So you're renting it from the mortgage company until you actually have full ownership of the property. That's kind of a little bit of his definition, but a lot of people get onto him for it. But that, you're exactly right, Terry. In that scenario, that's what would happen. They would cover the property and nothing in it. So then it would be up to you to get your stuff covered, just like a renter's policy. But I don't know, this is fantasy world. We're just pontificating on what could happen or might happen. Susie lives in Florida and opted out of insurances. Yeah. What if you self-insure though, and you want to opt out of insurance to save yourself $13,000 a year? Well, that's your prerogative. I think you could do that, but now the responsibility is yours. So I don't think there's a bailout coming your way, or should be. All right. So that's an interesting article. There's another article kind of along the same lines that I wanted to share too, that just kind of shows you how this all works. This is from the Carolina Journal. Hearings underway on proposed 42% hike in North Carolina homeowners insurance. Hearing got underway Monday to determine whether requested average 42.2% increase in homeowners insurance rates by the North Carolina Rate Bureau will be granted later this year. NCRB represents private insurance companies seeking the increase. It's also a time when North Carolinians are feeling the pinch of rising costs, not only due to the rise in inflation in a few years, but especially residents in western part of the state who are trying to pick up the pieces of their lives after Hurricane Helene devastated and decimated most of the area. Attorneys and staff members for the NCRB and North Carolina Insurance Commissioner Mike Causey presented their arguments and evidence for a base rate hike at the Department of Insurance. The request was made in January. With the NCRB wanting to increase to take effect in August 1st. A multitude of homeowners across the state voiced their concerns January 22nd. As expected, no one was in favor of the increase. It could see rates in coastal areas like Swazboro, Onslow County go as high as 71.4% and 99% in places like Emerald Isle. Those in the mountains would see the lowest increase, 4% to 20%, although that number may change with the context of the extreme flooding from Hurricane Helene. So this article, y'all could go find it at the Carolina Journal. It just came out yesterday. Today, yesterday, October 8th. But it's talking about stuff that was filed in January and they wanted to implement by August 1st, and it wasn't. And so now they're trying to get that increase again. And these are specific to those areas that are prone to be hit by natural disasters. And the lowest increase was for the area that was actually hit with the extreme flooding. So it's interesting to see what's going to come of this. I thought the timing's wild on that. The fact that they started this proposal in January to be implemented in August, and here we are in October with the hurricane. That's nuts. All right, let's go to a little bit of good news, maybe. September was a turning point for demand, with pending home sales flat after 9 months of declines. Tours hitting the highest level since April. Have you guys noticed an increase? We have noticed an increase. We're getting more buyers through. We're getting more sellers through. We're getting a lot more interest. And actually, our October pending transactions match almost what we did in Q2. Isn't that wild? So pending sales increased year over year in 27 of the 50 most populous metros. Home buying demand at earlier parts of the buying process is improving too. Redfin's Home Buyer Demand Index measures tours on the buying services. Redfin is up 9% month over month. Homebuyers have started to return because housing costs are coming down. The average mortgage rate dropped 6.08% last week to its lowest level in 2 years. That did go up though. Declining mortgage rates are also encouraging for some homeowners to sell. And this week mortgage rates jumped higher. So mortgage rates are up following a surprisingly strong jobs report. Now we don't know if it's going to be corrected. The last jobs report that kind of sent the Fed to lower was corrected negative 800,000. So I don't even know why they released these numbers if they're going to correct them later. But they just wait until you have the correct numbers. This is ridiculous that they release it and then correct it. Anyway, 254,000 jobs were created in September, and the unemployment rate declined 17 basis points from 4.22 to 4.05, blowing past expectations of roughly 150,000 jobs created, unless it's revised down later. In the context of recent labor market data, including job openings, quits, and unemployment insurance claims, the labor market has weakened meaningfully. There's no chance of a 50-point basis cut in November 7. And the daily average 30-year fixed rate climbed to 6.53% from 6.2. Wait, yeah, that's right. It climbed to 6.53%. Mike V said, "Come on, you know why they overstate the numbers? Why would they do something like that? They want the markets to move? I don't know. Why? Well, what reason would they have right now to lie about unemployment claims? I just don't see a reason." I will say that some say that the reason why jobs look so good right now is because people have more than one. So drop it in the comments if you have more than one job. I know people with more than one job. So yeah, unemployment is down because people have 2 and 3 jobs.
Ray, they also started hiring for the holiday season already.
Oh, really? Interesting. I would think the holiday season wouldn't be as rampant this year because the market's not as great. But I know they'll
lay them all off in January.
Yeah, that's true too. Consumer sentiment is up though. So that bodes well for future spending. Consumer sentiment hits 30-month highs. Mortgage rate optimism grows. So people see that the Fed cuts rates and they think, oh, great. Then everything's going to be cut and we can grow again. And now better than expected jobs report. And now it's going to be a tightening of the Fed. Wouldn't it be wild if they raised rates a quarter point? That's what there was a lot of talk about, he should only move it a quarter point, only move it a quarter point, only move it a quarter point. He moved it a half point. And people were like, that's a little much, a little fishy. Why are we going so fast? A lot of real estate agents were like, yay, and posting all over their social media, rates are lowered, yay. As a matter of fact, Compass had this ridiculous celebration saying now they've made it, and they're popping champagne in this nice house and going ting, 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 ting. And they're like celebrating the fact that the Fed lowered rates. When we all know as real estate agents, it's not a direct relationship to the Fed, to the mortgage rates. But anyway, beside the point. Then you had all the other agents on the other side saying, just because the Fed lowers rates doesn't mean your rates are going to, you had that side too. And there's just kind of this, if you're on either of those sides, you're wrong. It's just not where you need to be. There's somewhere in the middle here where you can calmly explain how this stuff works. But now you have a situation in which everyone celebrated publicly and your mortgage rates have increased. But the Fed lowered rates, but your mortgage rates have increased.
Well, they talked about it for so long that they ended up being baked in when rates were slowly declining.
Yeah.
And then since I'm looking at the Mortgage News Daily chart, which has a spike in it of up to 6.5%. And you can see on the chart where the rate change was, and then it staggered up a little bit, and then it took another spike up. So even though we got another quarter point out of it, you can't talk about it for so long that it doesn't do anything.
Yeah.
especially we were talking about, it's like the tide. But when you talk about it for so long, everybody rises up before the tide.
If they would have only dropped it a quarter point, though, I think it would have been reasonable. And I think a quarter point was what was baked in. I think everyone was anticipating a quarter point. They weren't expecting a half. So when they did the half, it kind of sent it reeling. And so now you've done it a half, and now you have a better than expected jobs report. And maybe you are playing politics with the numbers, but this is a stupid way to play politics, because now there is so much uncertainty in the market because the previous jobs report was revised down 800,000, which is so ridiculous. There's so much, now everything's variable again, which is exactly what you want to get away from in order to have a steady market, and a market where businesses grow, and a market where people can buy things and know what they're going to pay, and a market where people can move and put their home on the market and not be worried about a spike. And now we have this spike to 6.5. I mean, you're back where you were without lowering the rate. So that's history repeating itself. They've screwed up on rates, at least for for as long as I can remember, but more so, they left them down too long, and then we're in the predicament that we're in now. Yeah.
I'm the unpopular person who thinks that they ought to stay at 7, and that people will just get used to it.
The Fed rate should stay up there.
Mm-hmm.
Yeah.
Just stay at 7. Stop floating it for a while. Give it a couple years and let the country settle down.
I'm probably more unpopular than you are, because deep down, I think they should just get rid of the Fed. But
Terry, we're into the last quarter. Terry, save that prediction for the end of the year.
Yeah, there you go. Give us a prediction for the end of the year show and see where we land.
Absolutely.
I think you're right. I mean, my first house was at 18%. I think 7's a gift, so they should just like it and get used to it.
Well, it's still below, even at 7%, it's below your average. It's below the historic average. So I don't know.
Terry, we used to drink out of the garden hose too.
That's true.
And that was fine. That was fine back then.
That's right.
Well, thanks everybody for joining the show. That's all I got for you today. I will be back next week. Yeah, I'll be back next week. And then the week after that, I'll be at Rise in Las Vegas. So I don't think I could pull off a show there, but thanks everybody for joining. Thanks for your input on all these news articles and stories. If you find something that I didn't cover that you think I should cover, just shoot me a message. I'm on Instagram, Razorback, RAYZORBACK. If you want to join the contributor chat, I can shoot you a link there. There's also, I think, a link in my link tree. But you could join the contributor chat and talk about some of these articles, their impact on your lives throughout the week with some really cool people. So thanks everybody for joining. Thank you, Donna. I see you there. Thanks, Rick. Thank you guys in the Hillary, Janice, Jack, Mike, and Terry. Thank you guys for tuning in on Clubhouse. So I appreciate it. I'll see y'all next week. Bye.
Later, man.